Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, September the 6th, 2013. So let's just jump right into these markets. Let's start with the stock indices. We're looking at the Dow futures on the daily chart. And the not so interesting thing that happened this week is that we've just been stuck in this huge 200, and it's roughly 240 point range. It's not a huge range, but it's a 240 point range. And from a swing trading perspective, this entire zone here is really a dead zone. So if you're trying to swing trade this market right now, there's a good chance that you're getting chopped up because we don't really have any real conviction either way. The major levels in play, we had this level around 14,800, and we chopped around that level a lot last week. And look at how many times we've tested that level. We tested it here. We broke through it, but we held, 40 points lower. And we've just been holding, this zone. It's really a zone between 14,700 and let's call it 60 and 14,800. To the downside, and then you've got 15,000 to the high side. So you've got that 240 points there. And if you look at what happened on Friday, you had a strong up day on Wednesday. Thursday was a doji day, which was just a like an inside type of day with a tight range. And then Friday, you had I think you had the non-farm payroll report come out and just pushed the market right down into support. And then we just, we hammered or javelined right off there. And we ended up, somewhere just above the middle of the range. So if you look at that, we tested it to the high side. We tested the range to the low side. And we ended up somewhere, somewhere right in the middle. So not a lot of conviction in this market. But if you're on the short side of this market, it's probably been a little bit tricky. And I think you really need to see a clean break of these lows to the downside. And I think if you want to be on the long side, you need a really good break of these highs to the upside. So, a decisive break either way. So at this point in time, there's just a lot of sideways action. Be careful if you're a swing trader. There's been some good intraday trends to, here and there to day trade, looking for ticks in the futures market, but not a lot of conviction on the swing trading front. Now, we were talking about one of the scenarios last week where I believe this market could go either way, and I expressed that opinion, and I expressed a number of different scenarios. But the one cautionary sign that I had here to the downside was, if you look at momentum, you put in a lower high, or a lower low rather. Here you put in a low, and then you put in a lower low here, and momentum put in a higher low. And now we've got, the clear makings of a momentum shift back up to the high side. So I didn't really like the short side of the market for that reason. I don't like to short, when momentum is buried down to the in an oversold condition. So, I like to, it makes more sense to look at taking shorts from my perspective when momentum, is topping out, not when it's bottoming out. So I hope that makes sense. Let's jump over to the sister indices and let's look at the S&P. So the S&P, same sort of scenario there. You've got that sort of momentum shift back up to the high side. You're developing a minor trend line there, and even a minor sort of wedge here. So I think we really need, same situation. We really need some kind of guidance outside of this pattern here. We did hold a 50% retracement from this low to this high on the first bounce. So you really want to see, is it going to come up and break out to the high side, or is it going to break back down through the low? That's really where the rubber's going to meet the road in these markets, I believe. And let's take a look at the NASDAQ. So the NASDAQ is interesting because it seems to be a little bit stronger, and we keep pushing against these highs around 3,146. This is starting to look not so much like a head and shoulders reversal, but that same sort of pattern, where you keep, knocking on resistance, and then the question is it going to break through? So at this point in time, you've got momentum coming up, close to the high side. It's already at 80. I don't know how much upside we can expect out of that, but you really you're in the same situation as the Dow, except that you are on the upper end of the range as opposed to the lower end of the range. And you've got this sort of dead zone from a swing trading perspective happening, and you need guidance really out of this range one way or the other. So let's take a look at the transports and see if we can get any sort of further cues there. And I don't really see anything that's really that telling there, except that from this low to this high we held the 61.8. So a break of this trend line back up to the high side, for example, this trend line here, would put me more on the bullish side than the bearish side. Having said that, you've got a lot of you're in a period of seasonal, a seasonal void. You don't really have any seasonal tendencies at this time of the year until October-ish. So, this is starting to look, just like this, and it's also starting to look just like a box. So, there's really not a lot to talk about here. I think, there's times to trade, and then there's times where it makes sense not to really swing trade. And, at this point in time, until we get some kind of a real directional or decisive break, to me, this is one of the times where I'm not that keen on swing trading the stock indices. I'm better off just sitting back and watching what happens and taking day trades when you have strong conviction in the markets on an intraday basis. Because, like, for example, with the Dow futures, you're in a 240 point range there. If you're within that range, there's enough room to make a profit on a swing trading basis, but on a day trading basis. But on a swing trading basis, you really need to see some sort of directional move. So I think that should make sense. Let's take a look at some of the metals. Let's look at the gold. So gold has been really tricky here, but you can see, we've got areas of support. We have structure to the high side in terms of, we're putting in lower highs. Higher highs and higher lows. We're stair-stepping higher. We came all the way down to 1380. We bounced around 1380. We came as low as, I think, 1362-ish, just a little bit below there. But, as long as you stay above this trend line, I believe that the structure of the gold is still to the high side. You have a seasonal tendency until, I believe it's the end of October, if I'm not mistaken. So if we see this sort of situation play out again where we break the top of this trend line back up to the high side, then I think we could look for some type of a measured move of the distance of these swing points and project them higher. The distance of this swing point, project it higher. I think that would take us into these targets that we've been talking about around 1479, 1480. So that's sort of what I'm expecting as long as we hold that trend line on the downside. It's a nice sustainable 45-degree angle, and we break this minor, I call this a minor opposing trend line. If we break this, let's say, opposing trend line back to the high side, then I'd be looking at that level. So that analysis hasn't really changed since last week. Let's look at silver. I think silver's the same situation. Let me just delete some of these fibs. I don't think we really need them anymore. And I'd be looking to see if we could, break through this trend line here and see if we could get a push up into, 2650. That's kind of what I'd be looking for. If we look at the major down move, let's see if we can squeeze this out a little bit. So I think that, this, either this high or this high is really a key high, when you're looking at it from a fib analysis perspective. So this high, this low, 50% retracement. Yeah, I think these are the relevant levels just because we found resistance at the first test of the 50% retracement. We came back. Now, if we could push through this trend line, I'd be looking for, a test of the 618 or a test of 2649. This area to me looks like a magnet if we get running back up to the high side. Okay, so I like those levels there if we can get a run back up to the high side. It looks like we have a sort of accelerated trend line forming here, and a bit of a minor triangle pattern. So a triangle breakout there would, put me back on the bullish side for a move into 2650 to, let's call it 2696 half. Let's look at copper. Yeah, it doesn't look too interesting to me, but we seem to have, the same, we had a minor double top there, right in here. Let me just zoom in a little bit. Don't want to spend too much time on this analysis because it's not, it's good from a learning point of view, but there's not really that much to talk about in these markets here. So, you've got this minor double top here, and then we push back down the basically the range of this double top. Let me see if this makes sense. So you've got, here's the low, here's the high, and if you project that off of there, we could have went a little bit further, but that would have brought you all the way down to there. But this to me looks, I think that we would find support around $3.17. Roughly $3.17. But if we break back to the high side, then I'd be looking for the same analysis for a test of the 618 around 349. So that, if you've been watching my videos, that analysis hasn't really changed much over the last few weeks. Let's take a look at crude oil. Crude oil is an interesting market because it's been a really choppy, violent kind of ride back and forth. We pushed up to a dollar, just over $1.12. We pulled back into support on the lower end of this range around $1.04-ish. And, we put in some hammers there, and you can see we're back up above 108.80, which was the breakout point of this box area. And it looks like we're probably going to retest 112. And then I want to see if we can potentially get a retest of these of 115, somewhere around that level. Sorry, that's not what I wanted to do. Let me just measure this move, the distance of the box, and project it off of there. That would bring us into 115. I've looked at targets from a number of different perspectives over the last several weeks. I still like that 115 area as a potential high side target, and if we can get up there and then see from there if we can get anything going in the crude oil. Do I want higher crude oil prices? Yes and no. I mean, I do have some long-term oil positions, but having said that, I don't really like paying more at the pump. So, it's sort of the gift and the curse, for lack of a better description. So, but I think, from a chart perspective, I think 115 makes sense to me. A retest of 112 makes sense. I missed this secondary breakout here, and I probably should have just taken it. But I'm not, full disclosure, I'm not in this trade. But from an analysis perspective, I've been talking about, a test of 115 at some point. It's been a really choppy, sort of violent ride back and forth. But I think we're going to do it. That's just my opinion. And let me take a look at the natural gas. So natural gas, we were talking about, now that we're above 352, I think I mentioned in last week's video that 370 is probably going to be the level to test. We tested 370, we probed a bit above it, and we came right back down to 352 support. I think these, when you look at the market, I look at the market in terms of jumping levels. I think these are the levels that are in play. But having said that, I really don't have any, anything constructive on it from an analysis point of view. So I'm just going to move on to the, let's look at the 30-year bond. So the 30-year bond is right back into support. We did bounce. Well, we had a pretty, I haven't really been watching this throughout the week, but we had a pretty good bounce off of these levels, which we sort of suspected might happen going back into last week and the week before. The interesting thing is it looks like the trend in bonds is really to the downside, which is pretty obvious when you look back over the chart, right? But the question is, are we going to find support down here? I'm not really sure. To me, this looks like, if we break this 128 and 1430 seconds level, then I think we have the potential to go, quite a bit lower. I'd have to look on the weekly chart to see where we might have some targets, but I think, we're right at support here. We have the potential for momentum to go a bit lower. And, I think for an intermediate target, if we break that low, then what I'd be looking at, first of all, I'm looking to see, are we going to put in a double bottom off of that low? If we don't put in a double bottom off of that low, and let's say we break that low, then I'd probably be looking at a test of the bottom of this channel or a bottom of this channel. I'm not really quite sure. I'd have to give it a little bit more thought. This is really a messy chart, and I don't really have any clear targets on the bonds right now. We did have a bounce, and if we break, that sort of played out. So now I'm trying to look at this, with an objective mind, and the only thing that really comes to mind is to see if we're going to break that low. If we hold this low, then I'd be looking for a push back to the top of this channel, or at least 50% of the distance from this high to that low back. As long as we're below this channel, I think we're just going to stay bearish on the bonds. Now, a couple of things that I am noticing here is you've got a slightly lower low here, and then in the momentum of my trending indicator, you've got a slightly higher high. So that is a positive divergence, but that's just sort of an indication of that we might hold this low, at least in the short term, just for another short-term bounce. But I'm not really that clear on the bonds. I believe interest rates are going higher. I believe the bonds are going to go lower over time. The question is, on a 1 to 5 day lookout period, do I think if we come back next week we're going to be below this low? I'm not really sure. So I'm just going to move on from that and take a look at the 10-year. So the 10-year is already, the 10-year is broken below its lows, and it's kind of come up, and it's closed somewhere in the middle of the range. It's not very decisive, but what it is telling you is that it is finding resistance at these lows. Do you see where it closed right there? It is finding resistance at those lows. So as long as we stay below 122, 29.5, we're probably going to push back down and retest these lows and possibly even break them. So this is below 129 and 122 and 29.5, I think is really kind of bearish for the 10-year, and which bodes for higher interest rates because interest rates move opposite the bond. Let's take a look at the, I believe this is the 5-year. 5-year looks very similar to the 10-year, doesn't it? So if you look at this, you've got the same sort of situation happening there. This looks pretty, bearish. The only thing I don't like about, just jumping on the bearish side of this is that, momentum is really down to the low side. And, you can, like, I'll show you an example here. You can have momentum buried on the slow stochastic to the downside, and then you can, have a strong trend take place, like you see in this situation here, where you have this downtrend and, you've got momentum there. This is more of a one-sided market, whereas, when you get this sort of back and forth and oscillation, this is more indicative of a two-sided market. So, at this point in time, you can have this situation take place, but you never know when these sort of one-sided markets are going to just jump into full force until they actually happen. So I'm not betting on that happening, although I will say that to me this looks like a trend move, consolidation, and the potential for continuation. So I'm cognizant of that. This is normal for a trend kind of market where you get, both to the upside and downside. This is the situation to the downside. The converse of that is you get this to the upside where you get a move, you get a consolidation, and then another push higher. So this is something that, that will happen on different time frame charts. So I am cognizant that this could be the scenario that's going to play out. I would need to see a break of this low in order to confirm that, and I'd need to see a little bit more, give it a little bit more time to develop. So I hope that makes sense. I can't think of any markets that I didn't really cover here, except for the currencies. So let's just jump into the currencies. Let's look at the dollar index. The breakdance fight continues. We're just in the middle of this range we came off, and there's really nothing. There's really nothing doing here. The U.S. dollar index is just stuck in that wide range. Let's look at the euro. The euro, same thing. Here's the low, here's the high, 50% retracement, small bounce. So the question will be, are we going to come back into this $1.30 level, or are we going to push back up to the high side? At this point in time, I don't think it really matters. These markets are really not tradable from my perspective on a swing trading basis, so I'm not that interested in them. Let's take a look at the US dollar CAD, and I'm very disappointed in this, the US dollar CAD, because I was hoping to see a break of 105 half and a push into 108. It's still, we still have the possibility of doing that. This was the breakout point. We'll need to see if we're going to find some support in this area here, which is usually what you want to see. That if we're going to find support in here, it's going to be where we retest the breakout point of this pattern. So it'll be interesting to see if we find support in this area, and then we're going to push back up to the high side or not. Momentum is overdone at this point in time to the high side. So we are possibly due for a deeper pullback, potentially into this trend line or this trend line. But I'm cautiously optimistic that we're going to hold somewhere in this zone and push back higher. If we don't, then that's fine too. But to me, it really hinges on it really hinges on what the U.S. dollar is going to do, and the U.S. dollar is just kind of back and forth. So I'm not really expecting a lot of trending out of this. I just thought that we would, just test the high side of where the possibility, of where possible targets, are. So I was sort of expecting to move into 108. I expressed concern that the move might be done with a retest of this level here last week. So I'm still cautiously optimistic. And we've got the makings of a bounce off of this level for the simple fact that we have, this is something Rob Hoffman talks about a lot, these W patterns, where you get, a W pattern, and then you get a push back to the high side, W pattern, you at least get a bounce. So I think that, off of this level, we may see a little bit of a bounce into Monday, Tuesday. But, having said that, a little bit of a bounce could bring you up to here. It's not to say that we're going to, go to here. So at this point in time, if we bounce and then come back through this level, then I'll be looking to see if we're going to hold that zone. And if we break that level, I'll look to see if we're going to hold this zone. So not really a lot to, to get excited about. But from an analysis perspective, this is sort of what I've been looking at for a number of weeks, somewhere up here. Now, having said that, let's wrap up this video. We've got a couple of really good events coming out at the end of September with the CSTA, a fusion. It is called, let me just pull that up. Okay, so if you're still with me here at the end of this video, if you come over to the CSTA.org, let me just write this down here. So if you come over to www.csta.org, okay, it will take you to the Canadian Society of Technical Analysts. So we have two events coming up this month with the CSTA. For those that know me, they know that I run the Oakville group. I'm the chapter head of the Oakville group, and I run the regular monthly meetings with the Oakville group. So if you come down here to this is, we have a theme going on going forward for probably the first 6 months of the season, the first 6 meetings or so, on trading plan development and considerations for putting trading and investing plans together. So our first meeting, which is going to take place this upcoming Wednesday, September the 11th at 7 p.m. at the Queen Elizabeth Park Community Center, is on, it's called Building a Trading Plan Without Emotional Biases. That's going to be with Ziad Jassani of Independent Investor Institute. He is Larry Berman's operating partner there. And if you click on that link there, you can register for this event. If you haven't been to a CSTA meeting before, the first meeting is free. You might want to consider joining the CSTA for the simple fact that it's a great organization. It's only $125 or so a year to belong, and there's a lot of benefits in being, a member of the CSTA, aside from networking with other, active market participants. So, the topic is really going to focus on, do you have a trading or investing business plan? And if not, why not? And here are some considerations from some speakers and some industry professionals going forward, and how they developed their trading plans and the key considerations that they have on a day-to-day basis in order to manage risk, money management, some technical analysis. Of course, that's what the organization is about. But also, how do you manage risk? How do you position size? How do how do they approach the markets? What do they look at? How do they stay in the game? Through the ultimate losing periods, and how do they manage the winners? So this is a really important topic. I think if you don't have a trading or investing plan, you really need to look at it in terms of, would you run a business without a business plan, or would you get in your car and drive across the country without a map or a GPS or some sort of a plan? If it's going to take you 10 days to get there, you need to know where you're going to stop. Where are you going to stop over at night? How much rest are you going to get? Do you have enough money for gas? You plan these things. So a lot of people come into the markets and they don't really plan what they're going to do. They just sort of wing it. And I think that really accounts for a lot of the lack of success of a lot of market participants. They don't really come into the market thinking that they have to develop a plan, and it's crucially important. I mean, experience has shown me how crucially important a plan is to success in this business, and it is a business. So let's so this meeting is coming up on Wednesday. This is going to be a great event. We usually average anywhere from 25 to 50 people out at these events. Just make sure you register so that we have a seat available for you, because we do lock it down when there's not enough seats available, and you may be stuck without a seat. So hope to see you there. And the other major event that's coming up, if you go back to the home page, there is this is the event that I started out explaining. It is the Fusion Analysis Conference. So this is a joint conference between the Canadian Society of Technical Analysts and our sister organization in the United States, the Market Technicians Association. So you can click there on this link at the front page. You can register for this. There are going to be a lot of really well-known speakers. Let me just back up. So register. There's going to be a lot of well-known speakers, high-level professional speakers at this event. You won't want to miss it. It's very affordable. I think it's only $50 for the full conference for the day. They've tried to make it attractive for people to come out and learn. It's going to be a really, really great event. I appreciate you coming out and supporting the event, but it will be to your benefit as well, because you'll learn a heck of a lot. So I'm going to wrap up this video. I'm sure we're probably a lot longer than we should be. And good trading, good investing. We'll look forward to seeing you at one of these upcoming events. And be safe in the markets. The markets are a little bit choppy and a little bit non-directional right now. So just manage your risk, and good luck with your positions. And we'll look forward to seeing you soon. All the best.